Hi, everyone. We can start the discussion now. Very welcome to this very interesting, insightful conversation I'm going to be hosting with our guest, Malina. I'll just start with a brief introduction about myself. My name is Rahul Sunthalia. I'm currently one of the directors at Kaplan in the Middle East. Been working in the region for Kaplan for almost 7.5 years now, and in the region for close to 12 years. And I've been traveling around the world. We meet our clients, we meet experts in learning and development HR field. And globally, if I say that two of the most trending topics these days where people are excited to learn about and upskill themselves, the first one I'm sure you're aware is AI, artificial intelligence. The second one is sustainability and ESG, right? That's no longer something which is a checkbox for an organization. It's becoming slowly and gradually a part of global strategy for every small or large enterprise. And we thought it makes sense to ask our expert, right, who's really seasoned, experienced professional in this area. So let me introduce our guest for this session, Miss Malina. So Malina is one of the 7 women globally to receive the prestigious SDGs and her award from the UN and the World Bank for her extraordinary work implementing the Agenda 2030 for Sustainable Development. She's also the founder of Earth and Company, a consulting company that has been leading various projects from inception to implementation, not only in Greece, where she's based from, but for 14,000 companies around the world across diverse industries like renewable energy, media, retail, agri-food, and consumers. And as an association with Kaplan, she's working with us in the region for our clients to upskill people in ESG and sustainability for past almost 4 years. So Malina, thank you so much for taking your time out, and we really warmly welcome you for this hopefully very interesting conversation. Thank you. Over to you.
Thank you so much, Rahul. Thank you all for attending this discussion. I'm very much looking forward to receiving your questions and comments. It's my great pleasure to be here with you, and let's analyze everything behind ESG and sustainability. As Rahul said, they are extremely hot lately as topics. So let's dive deep into what this is all about.
Thank you, Malina. Thank you so much again for your time. So I think I'm going to start with the question which probably started from the first statement I made, that everywhere we go around the world, the two trending topics are AI and sustainability. Of course, you are a sustainability expert, so I'm not going to ask you AI questions. But my question is, why do you think lately everyone is talking about ESG and sustainability? What has changed in the recent years?
Rahul, I would say that ESG and sustainability, because they are two different things. Let's define that to begin with. Sustainability, we would say, is the broader vision of the company, right? Where the company wants to go in the coming years. And this has to include, social elements, economic elements, and of course, environmental elements. ESG are the criteria, the environmental, social, and governance criteria that mostly investors, financial institutions, and boards use in order to evaluate an investment or the performance of a company. So this is why you see me mentioning both, because people tend to use them as synonyms, but trust me, they are not. So I would say that the whole concept of sustainability and ESG, they moved from a nice to have to a must-have. And right now we are facing incredible changes. We have climate change, we have supply chain disruptions, we have growing inequality, because we are also talking about social sustainability, not only environmental sustainability. And all are currently affecting business continuity on the one hand and investor decisions on the other hand. So ESG is now seen as the lens to assess long-term value, not just short-term performance. And we would say that ESG is pretty much the best risk assessment tool that we can have. If we take a couple of examples like BlackRock, for instance, which is the world's biggest fund, and if we see what PIF is doing in Saudi Arabia, we would say that institutional investors are making it clear. If you're not integrating ESG in your, everyday business, if you're not integrating ESG at the heart of the organization, then it means that you're not future fit anymore. And we see customers, we see employees who are also demanding more, and they want to associate companies with, with their own values pretty much. So I would say that contrary to the public opinion, ESG is not a trend. It's here to stay. It is already shifting how business success is defined. And I'm glad that globally we're not looking only at the financials of the company, but we are also looking at, all the ESG criteria and all the ESG related risks that are associated with any company.
So just a sort of a follow-up question on that. Of course, based on your answer, and even for me, I got a lot of clarity. I probably until a year back, I was of a similar knowledge that ESG and sustainability are synonymous, but I'm sure our audience here are better aware now. Now, what is changing in the GCC country, which traditionally, I would say, had very are oil and gas dependent economy, which are not so environmental friendly. But of course, the kind of initiatives we are seeing, especially in Saudi Arabia, the Vision 2030, the Dubai has its own Vision 2040 on sustainability, and there's a very massive change, which is very contrary to the core economic strength, right? And it's of course definitely good and positive. But what is changing in the Gulf countries where the government, especially, and the large organizations like PIF you mentioned, are going towards more sustainability? So could you please enlighten our guests on that?
Sure. And as you said, we are talking about, traditional, pretty much oil and gas economies. And now they are making a huge shift, which is very brave, right? It takes a lot of effort, and it takes a fantastic mind shift that it's actually happening right now in the region to understand that, okay, oil and gas, is crucial for the economies. It fuels pretty much the global economy. We cannot really forget it tomorrow morning. We have to keep on moving. But on the other hand, they understand the value of sustainable investing. They understand that ESG needs to be part of every single project right now. And this is why they are pretty much redesigning every single strategy and every single investment. And they are making huge investments towards renewable energy or sustainable tourism and so on and so forth. So I would say that we live in exciting times because we see such a shift happening, rapidly. For the first time, at least in my lifetime, what I've experienced is things getting from, better to worse, not the other way around. And this is fantastic, what is happening in the region. And I'm glad to, to be able to work there and actually see this happening in every single country in the Gulf region.
Thank you, Melina, and thanks for sharing your short thoughts. And then just a request to all our attendees that I'm sure you will be very curious, and you may also have a lot of questions for Melina. So at any point in time, if you have a question, you can put it on the chat, and through the session, or especially dedicated towards the 15 minutes agenda towards the end, I'll pick up some of the select questions and I'll address that to Melina, and I'm sure we will get an expert opinion on that. So with that, I go to our second question, right? That again, this is a common question I'm sure you must have received around the world: is all sustainability and ESG efforts comes at a cost. Some of them are direct cost, which might be you need to spend money on low emission products or equipment, and some could be indirect, that you just have to get people trained and make them aware, right? So as a business, if I say that my end objective is shareholders profit maximization or value creation, why do I invest in ESG? Or why should a business invest, or a company, whether it's a government company or a private company? Government, it still makes sense. They're not for profit, but for a private for profit business, why should we invest in ESG?
That's the million-dollar question, and that's the question that I get to answer pretty much every single day with the clients I work with,
I'm
as you
sure
can
you are a billionaire
understand.
today.
That's the most common question. You know, the first thing that the board will ask you is like, why should we do it? And why should we do it now? Let's just wait for 5 years or 10 years and we'll see, you know, how it goes. So I would say that yes, there is a cost. We know that. We cannot deny that. But I would say that at least what we've seen is that the cost of inaction is far higher. And we have climate disasters right now. We have regulatory fines. We have reputational damage for companies. We have resource scarcity, and they are all very expensive problems to solve. Also, you see problems like, you know, the Dieselgate scandal, for instance, with Volkswagen, just to give you a couple of examples where, you know, we have huge governance problems in this case. In case you don't know, in some diesel cars, some engineers installed, cheating devices to actually cheat the CO2 emissions test. So I'm just giving a simple explanation here. It's far more complex than that, but here we have a huge governance problem. So what I mean by that is that can we really say that they were two engineers somewhere in the R&D department and nobody really checked, no managers, no board, nobody knew what they were doing? So you see, why am I sharing this example is that if I would ask you before this ESG analysis, if you would invest your money in Volkswagen, probably you would say, yes, it's a fantastic company. It's been here forever and so on and so forth. But when you start analyzing, any company, not only Volkswagen, through the ESG lens, you are more skeptical. You see more problems that you can be, proactive and solve them before they become crises and so on and so forth. So through that lens, investors and companies understand that, when we integrate ESG in our risk assessment, at least, we can be more proactive and solve the problems before they become, gigantic crisis. Another example that I would use is the companies that invest, in ESG, they see that sustainability often leads to operational efficiencies and to innovation. A very simplistic example here, when I replace the lamps of my office, with LED lamps, I'm saving money and I'm supporting, the environment as well. So it's a win-win situation here. So ESG way of thinking can also help you cut costs. Not only creates costs, but can help you cut costs at the same time. We also see companies like IKEA, for instance, that is committed to becoming fully circular by 2030. And it's not just about ethics and about saving the world and making the world a better place, but it's about future-proofing their supply chains because they have experienced a lot of disruptions due to climate change. So you see, there are a lot of reasons why a company should invest in sustainability and ESG. And yes, it might require some upfront investment, but we see over and over again that these companies are resilient, are better when it comes to their financials, and they are better when it comes to employee engagement and retention.
Right. That's quite insightful. So just on that, my follow-up question, just for my knowledge and also for our audience today would be, can you just share, I mean, if you have at the back of your mind, few examples where investing in sustainability has led to tangible gains for organizations, maybe in ROI or stock price or any form of tangible gains which you can measure, maybe globally if there are some best cases, or regionally if you're aware of, that'll be really good to understand.
Yeah, I mean, sure, I can share countless examples. Let me share the example of Unilever, for instance, a brand that we all know that launched a product line which they call Sustainable Living Brands. And this product line grew by 70% faster than the rest of the business. So we're talking about financial results here. Also, let's talk about Ørsted, which is a company in the energy sector, who used to be an oil and gas company, a coal-intensive company in Europe, and it pretty much pivoted early and they made the shift to renewable energy and saw the valuation booming. They became one of the most sustainable energy companies globally, and they are, one of the best examples that we use in order to share this amazing journey. In the Middle East, I will also share the example of First Abu Dhabi Bank, that between 2022 and 2023, if I'm not mistaken, they issued something like 35 billion US dollars in sustainable financial products, which opened a whole new sector, if you like, in the bank, a whole new offering, all right, because they didn't have something similar in the past, and they designed, whole new financial products such as green bonds or sustainability-linked loans and so on and so forth. And it opened the door to innovation, even in a bank that is considered to be a more traditional sector, if you like. So I can share countless examples from pretty much every single sector. There are some sectors who are more advanced when it comes to sustainability, like the energy sector in some countries, or the financial sector, and so on and so forth. And we have some sectors that are lagging behind, such as agriculture, unfortunately, is still far from making this transition to more sustainable practices, and so on and so forth.
Right, that's really interesting. We got a really interesting, so when you're talking about investments in ESG, right, and sustainability, we have a audience question in terms of what kind of investments. Can you give an example? Whereas I think I understood that a company decides to replace their normal lamps with LED lamps, so that's a cost, right? But anything else, maybe let's say specific to learning and development area or retail, what kind of investments? Like, are you talking about big ticket investments, or even small changes like the LED lamps is a big step, but it's not a substantial investment as per my understanding.
So, okay, when we talk about investments, I think we mean pretty much two things. The first one is, what kind of investments a company can make in order to cover all ESG aspects. And this doesn't have to do necessarily with money. It's not only financial investments, all right? It could be your time, your energy, your focus, your priorities, and so on and so forth. One thing that I have to make clear here is that if we truly want to become more sustainable as a company, it means that we have to address all ESG areas. Because what I've seen in the past is that companies, they make investments like in LED lamps or whatever when it comes to the E part, the environmental part, and they totally forget the governance of the company, all right? So in order to be truly sustainable, socially and environmentally, you have to address all ESG aspects. You have to invest in your people. You have to make sure that they will have work-life balance. You have to pay attention to the employee retention and attraction. You have to have policies in place to make sure that the right governance exists in the company, and so on and so forth. This is the first part of investments. But also when we talk about other type of investments, let's say that we have a bank or an investment fund and so on and so forth. There we explore how they can integrate ESG criteria in their investment due diligence. In other words, in the past, they would just check their financials, the financials of the investment. They would decide if this is a profitable company or not. But now, depending on how aggressive they want to be with the ESG criteria, they can exclude companies, by default, meaning that they will not, let's say, invest in energy companies or in oil and gas companies. They will only invest in oil and gas companies that are making a transition towards renewable energy companies. So when we talk about investments, it's a holistic approach on how we can integrate ESG criteria, not only to redesign the way we operate as a company, but also how we can enhance the investment decisions for our investments or projects.
Right. Thank you, Melina. So I've got one more question from somebody from the audience. I think it's related to the investments part, and I just read the question is that as the returns in ESG domain have not been very strong, right? So there are ESG specific funds or and so on globally. And investors like Warren Buffett are still investing in oil and gas, right? So how do you think ESG will grow without, let's say, broader investor backing? Of course, you give an example of BlackRock in the beginning, where I think I was on a separate meeting with you recently, and you talked about BlackRock really has redefined ESG and sustainability. But BlackRock is biggest, but it's not the still the major investor pool, right? Which invest across assets. So what do you think should change, which ensure that, okay, whether it's BlackRock or Merrill or Morgan or right, whether it's a small asset management company in the GCC, they all only back investments which are some form of sustainable organizations. So what do you think should change?
Okay, so again, let me clarify this before I answer the question. So first of all, it is not true that ESG has not been very strong in investments. Actually, if you read one very interesting study from PwC, it shows that pretty much 80% of the investors globally have integrated some type of ESG criteria in their due diligence process and their investment decisions, 80%. So we're talking about a massive percentage of the global investors and funds that are taking into consideration ESG criteria. Now, with that being said, it doesn't mean, and let me clarify that for a minute, it doesn't mean that an ESG fund will not invest in an oil and gas company by default. Okay, as I said, we have some funds that are very strict and they will only invest in green projects. Okay, and that's it. That's their strategy. That's what they choose, okay, for their own reasons. So they will not invest, let's say, in fast fashion. They will not invest in oil and gas. They will not invest in weapons, tobacco, and so on and so forth. All right. There are other funds that they also integrate ESG criteria in their investment decision in order to understand if a company is risky or not when it comes to environmental, social, and governance-related risks. This means that they might choose to invest in an oil and gas company because it's very profitable, but they will, if they have to choose between two, let's say, oil and gas companies, they will prioritize the company that actually is also making a transition towards renewable energy, or they are exploring alternative fuels, or they are exploring hydrogen options, and so on and so forth. So it's about, it's a way to assess, you know, what is risky and what is not. So we have everything. We have the very strict funds. We have the ones that are integrating ESG as a risk assessment tool. And we have BlackRock, for instance, that goes beyond that and is making bold commitments, like they want to be net zero by 2050, which means that not only their own operations will be under scrutiny and they will have to reform pretty much everything, but they will also have to do the same work with their all investments, with their portfolio companies, which is quite complicated, as you can understand. One last comment regarding Warren Buffett. Warren Buffett is based in the US. The US right now is one of the 3 countries that have not signed the Paris Agreement, that, you know, all the national visions that you mentioned, Rahul, have to do with, you know, each country's commitment to the Paris Agreement. Only 3 countries in the world right now are not part of the Paris Agreement. This is why you see investors based and companies in general based in the US not taking very much into consideration ESG, which was not the case 3 years ago in the US. But at the end, you know, it depends on each president's choice.
Of course. Right. We were getting a lot of insightful questions. I think probably I'll have maybe park some of them towards the end of the session.
Sure.
I've got one more question on this, right? I think and this question is very common to somebody on the audience as well, is for a company just starting their ESG journey, right? What should be the first steps? What should be the, I mean, it might sound cliche, but what could be the low-hanging fruit? So if I get easy wins, then it'll probably be a motivation, and then you go on and do difficult steps. And it's very simple, very similar question we have from one of the audience as well.
Yeah, that's the second question. After the cost question that I get, that's the second question that I get most of the time. So it's not cliche because, when companies are just starting their ESG journey, it feels way too complicated. All right. They are lost. We have something that we call ESG curve, where they start at the bottom with just, doing the necessary stuff and just being compliant. And that's it, to avoid any penalties, any risks, anything. And then as they move up the ladder, they understand that they can actually, benefit from all these things, and they can create new products, new opportunities, and so on. So first of all, I would start with understanding where we are right now. We should map our operations. We should identify where ESG matters the most. What can I do as a company? Can I save more energy? Can I do something about water? Can I do something about waste? What about my labor practices or the governance framework? You start with yourself. And that's the first step, I would say. And quick wins might include something like energy audits to reduce energy and waste and so on. Employee well-being programs to boost morale and retention. ESG trainings could be part of this for leadership development, because unfortunately, people, are not on the same page when it comes to ESG. And in some cases, we see that the board has a vision, they understand what needs to be done and why this is necessary. And then when you go down to, the employees of the company, they don't understand the why behind it. And what's in it for me? And what should I do? Will I have more workload? Should I have filed more reports? Nobody wants to change, even though everyone wants change, as the narrative says. So training is a huge part of it. I would also engage stakeholders and understand.
Just on the training part, right?
Yeah.
So I'm sorry to cut you in between.
No worries.
Because that is something which is sort of it's an industry I've been working very passionately over the last 12 years. As an individual, right, if I'm a working professional across domains, whether in finance or accounting or audit or engineering or IT, right, should I take initiative on my own and upskill myself on sustainability and ESG, or I wait for my organization to sort of start a program and the process, right?
I believe, Rahul, you should
training for me, right? That's a question.
You should do both. What I would do, since this is a revolution like AI, okay, I would want to know how AI is going to disrupt my job and my future. So since sustainability and ESG is a mega trend, as we call it, I would start with myself. I would seek, opportunities to upskill and understand what is happening and why is this important for me and how is going to affect my job, my department. And then I would also advocate, within my company and push the HR department or whoever is responsible to organize something, more structured for this particular company, probably. But it's important to understand that ESG and sustainability is and should not be a separate department in the organization, because trust me, it affects every single department of the organization. You can be working in the internal audit or in accounting or in sales or anything, you can in marketing and so on and so forth. Everyone needs to know, what sustainability is all about and how we can use it to our benefit.
So, that's I'll ask you a follow-up question on that last point you mentioned, that there shouldn't be any ESG and sustainability department within a company because it's sort of integrated. Now, I have seen a lot of organization which has a team or a department like this. Now, is it a common thing you see across the world? Of course, I don't see a lot of departments outside the GCC, but here I've seen few companies having this without naming them. But is it very common practice in the West, or you think people now understand what you're saying?
Actually, it's a very common practice to have a sustainability department, especially in big companies. We have different structures. some companies, for instance, have the sustainability department under marketing, which is a not very wise thing to do, if you ask me, because it means that you use sustainability only as a marketing tool and not as a change tool, if that makes sense. Other companies, they have it under the compliance department. So most of the times they use sustainability only for compliance as a baseline, and that's it. What I always say is that apart from having a department, which of course is crucial, especially if we talk about big companies that will have to produce sustainability reports at the end of each year, and the sustainability department is responsible for that. But what is wise is to have pretty much sustainability ambassadors in every single department, because you will have to have KPIs from every single department of the organization in order to produce the sustainability report. And trust me, I've seen resistance to change. I've seen people not understanding why these KPIs suddenly are important and why do we need to worry about these issues. So I would say having hybrid models always works for the best.
Okay, great. I've got one last question from my side, and then we have a lot of interesting questions from our audience, and we'll take them. So my last question is more of forward looking, that how do you see the ESG landscape evolving over the next maybe 4 to 5 years globally, and more importantly in GCC or in the region, right? What do you think?
Well, in the GCC, as I said earlier, we're seeing this transition from voluntary reporting, which was the case a few years ago, to mandatory ESG reporting. And when I talk about reporting, it means that we will have to integrate ESG in the DNA of the organization so we can have something to report on. Otherwise, there won't be any report. So the UAE and Saudi Arabia are integrating ESG into stock exchange requirements, as you mentioned, into national visions as well, sovereign wealth strategies, and so on and so forth. And I think that we expect to see in the region mandatory disclosures and taxonomy frameworks in the coming years. Which of course will be aligned with international standards such as GRI and other standards that a lot of companies use in order to produce the sustainability reports. We see massive growth in sustainable finance. Pretty much every bank in the region is designing right now some kind of sustainability related financial instruments like green bonds, green sukuks, ESG linked loans, and so on and so forth. We see massive growth in ESG capacity building. Pretty much every company right now understands that they are being affected, so they need to upskill their people, and this is why we see upskilling boards and executives and everyday employees to this shift. And I would say that we see a shift from having projects here and there, which was the case before. We would have some tree plantings here, some charity donations there, some training courses here, and so on and so forth. Now we see strategies. We see sustainability strategies where ESG is embedded in the business model, and it's not just a CSR initiative, a photo opportunity, a donation, and that's it. So there's a window of opportunity for regional companies to lead and not to follow. As I said, they are making a bold move right now, pretty much every company in the region. And the ones who move first will be the ones who will shape the standards, attract capital, and set the tone for sustainable growth in the region.
Great. Thank you, Melina. Right. So now that's, as I said, that was the last question from my end. I will take few from our audience. So I think there's one interesting question on, there's a lot of data, right, which could be required when a company is starting on that ESG journey. So you have any use case or an example or any guide for integrating ESG data collection into existing business systems without causing operational friction?
So first of all, that's a bit generic question. I will try to answer. I'm not sure if I answer every aspect. Please send a follow-up question if I don't. So there are 2 points. The first one is that we need to design a set of KPIs where we will measure our performance against our ESG targets, which will be defined by the board or the senior management and so on and so forth. And it doesn't mean that we are disrupting the operations necessarily, but we need some KPIs to start measuring, let's say, our CO2 emissions, or the waste management, or the water usage, or the employee retention, any type of KPIs that we set in order to understand how ESG is evolving within the organization. Now, when we get all this data, we can use various data platforms that exist. I mean, I'm not going to name a particular platform.
Yeah.
There are countless of platforms that you can find online. And depending on the size of the organization, you can either use this particular data platform to gather all the KPIs and produce your final report at the end, or you can integrate also AI tools right now where you can measure the data in real time, which is a new trend that we see pretty much globally. And you can also build custom platforms for your company. If we're talking about, a big company, maybe they want to build a custom platform that accommodates their own needs. And the same thing goes for investment companies and banks as well, where they monitor the KPIs from their clients and their investment companies. And this is, much more complicated because each company might use a different platform. So what they're trying to do is, to work with them to combine all data in their own, platform. So it's a way of just measuring and monitoring what is happening with the KPIs that you set initially in your strategy.
Thank you, Melina. Thank you. I've got a very interesting question. I think some of our audience here, I'm guessing, are young working professionals in early stage of their career, right? I ask you a similar question, right? What should I do? Should I invest on my own, or should I wait for my company? It's a very similar question that I, as a young professional, feel a distance between myself and the ESG revolution happening, right? Because my organization, if I'm a young 1 to 3 years in my career, I'll just do my task. If I'm an analyst, I'll make reports, right? What can I do in my personal capacity to be more relevant and be a part of this change?
Yeah, as I said, I think that every single position, it doesn't matter if you're just starting or if you're a senior executive, every single position will be disrupted by sustainability and AI in some form. So what I would do is that I would invest and train myself and learn what is happening in both worlds, not only in sustainability, because they are the biggest mega trends that we see globally. And I would start, I don't know, find a training course that is relevant to what I do. I would try to figure out, what kind of disruptions are we expecting in my field, in my industry, in my work in the coming 5 years or so. So I would try to be as proactive as possible in order to be able to understand what is needed from me. Because trust me, something will be needed from you when it comes to ESG and AI, and to also add this element.
Right, great, thank you. Now I was just reading the questions which were posted earlier, but officially we are now open for questions for the next 10 minutes until we do sort of a thanks to Melina for the last 5 minutes. So if there are any more questions from anyone, I've got one there. Is there a recommended framework or standard business worldwide can showcase or track different progress? I think the similar question, we were on a call a few days back, right? Is there any ESG reporting standard? Like in accounting, there is IFRS, where if a company maintains the IFRS books, everyone is happy, right? So is there any ESG reporting standard as such? Or do you think there's a need for one, and maybe you're working to create something like that?
I wish. I don't have the time because it's quite complicated. But the truth is that if you Google right now ESG reporting frameworks, you will get something like 1,000 different logos. And it's tricky because, when you're just starting, you don't know which one should you choose and what's the ideal framework for your job, for your field. I would say that one of the most trusted ones is GRI, the Global Reporting Initiative. Also, many companies use TCFD, the Task Force for Financial Disclosures that are related to climate change. Others use SASB. So I don't want to just throw names here. All I'm trying to say is that you have to do your homework before you start the reporting process. Find the framework that applies to what you do as a company. Some frameworks are more generic, like GRI. Other frameworks are designed for specific industries. So just do your homework, because selecting the framework will help you not only report on your progress, but also monitor your progress, because there is guidance on which KPIs you have to follow, where you will find them, how you will report them, what happens with the internal and external auditing process, and so on and so forth. So, and one last comment, I would say that most of the companies right now use more than one frameworks. So this means that they might be using GRI for their generic sustainability report, but they also, I don't know, have science-based targets for specific elements. They disclose their CO2 emissions with another framework. They also use TCFD for climate-related financial disclosures. So they're trying to make their reporting as comprehensive as possible. But please do not think that this will happen tomorrow morning, okay? Do not stress. Just start somewhere, use one framework, and as you progress, add more elements to it. There's no such thing as a perfect report, okay? It's a work in progress, and it's a journey towards sustainability.
Okay, so what I understand is, to summarize, maybe is not one size fits all, and different organization needs to look at the business model and look at, as you said, thousands of available frameworks out there, and choose what could be better for them, right? That's what I understand, to summarize your point.
Yeah.
Great. I think we'll take two more questions, Malina.
I see one that just came regarding common challenges. Should we take this one?
Yeah, please. I can read that. What are some of the common challenges that investors face when evaluating ESG impact of organization or investment prospects, and how can an entity in public or private space help address these challenges?
Yeah, thank you for the question. So I would say that the most common challenges, we have internal challenges and external challenges. The internal challenges, when we talk about an investment firm, let's say a fund or a bank or something, is first of all to convince internally, the analysts and everyone to put weight on ESG criteria. I've seen countless times that they have the ESG due diligence sheet in place, and people not using it or not using it correctly. Or even though they see that there is an ESG risky investment, they prefer to invest in this company purely based on financial analysis and not on ESG analysis. So I would say the internal resistance to change is one big challenge. And I've seen banks and funds, tackling this issue, first of all, with trainings and awareness and, helping people understand the why behind all this, and not just telling them what to do, but explaining to them why this is important and how is this safeguarding our investments. It's not about making the world a better place. It's about safeguarding our investments. And the second challenge that I will mention has to do with the external, which means that when we invest in a company, and BlackRock, for instance, has faced the same problem many times, is that at the beginning, we have the ESG due diligence, we've seen what the company is doing, we're making our decision and so on and so forth. But then how do we keep track? How do we understand as investors if the investment is actually implementing all these things? They are actually making progress. You will tell me, but we have the KPIs and the data and everything that is showing us, progress, which of course is true. But apart from that, there is a hidden truth behind the numbers, which the same goes with the financials as well. There is the financial truth and the real truth, if that makes sense, where we cannot really be sure if this company is actually managing the ESG related risks in the best possible way. And unfortunately, it takes some crisis, some problems, some scandals, like the one that I mentioned with Volkswagen, to understand that probably was not managing all ESG risks in the best possible way.
Thank you, Melina. So as I said, we will take one last question.
Yeah.
Right. And it's a very interesting one. It's more region specific. We talked about the political landscape in the US. So it's just come in. Even I would like to know this because, of course, even the US is not part of those three countries, but it is one of the biggest economic powerhouses in the world. And a lot of investments in the Gulf comes from US or also goes into the US. So it makes sense to understand. So what is the best approach for a global entity which has a US presence and still driving the ESG appetite without losing focus? Because there is, in US it's not mandatory and it's okay if you do it, it's like a wish list, right? So if I would still want to contribute to ESG or sustainability, but I'm an American company or major business operations are in US, how do I take it up?
Well, this actually has happened in the past, because when President Obama signed the Paris Agreement, it meant that, all the American companies had certain obligations and so on and so forth. And then President Trump got out of the Paris Agreement, and then President Biden signed the Paris Agreement again, and now we're out again. So it happened, this back and forth situation has happened in the past. It's not the first time that we've seen it. And what I've seen is that most companies, they realize that at the end of the day, this doesn't have to do with compliance. They understand that integrating ESG criteria one way or another in their decision-making process, investment process, the way they operate in general, it's for their own benefit, because they see better returns when it comes to the employee retention and attraction, especially Gen Z, who, they don't just talk sustainability, they walk, they wear it, they eat sustainability, and so on and so forth. They see benefits when it comes to long-term financial performance, because every company in the world is not here just to make money for 3 years. They are here for the long run, right? So it's undeniable that climate change exists. It's undeniable that it comes with a cost. Only last year, the insurance companies had to pay something like 250 billion, if I'm not mistaken, in fees that were a result of climate change, pretty much, of droughts and hurricanes and floods and stuff like that. So it's undeniable, it exists. It's about, do you want to be proactive as a company and address all these issues by yourself, even though nobody's pushing you towards this direction? Or you want to just sit back and when it's mandatory, I will see what I will do. It depends on your strategy and philosophy as a company, I would say, in general.
Thank you, Melina. So I think we've come towards the end of this very interesting and insightful conversation. Again, thank you so much from my side, and of course it was very insightful for me as well, and of course from our side as a group, as Kaplan, we have been working with you on the ESG space for trainings and programs, and yeah, thank you so much from our audience side. Just for everyone's knowledge, Melina and us as Kaplan have collaborated to launch the one of its kind ESG and sustainability learning program. It is a 3-step program where in stage 1 you learn about ESG foundations and basics. In stage 2 you choose your industry from oil and gas, banks or financial services, tourism or public sector, and you specialize in ESG and sustainability related to your chosen industry. And a third is your region. And if you're from the GCC, you get regional regulations and updates of what is going on in ESG and how should you proceed with ESG and sustainability in the GCC, right? There are maybe hundreds of other global certifications in ESG, but most of them are generic and doesn't let you study at your own pace and specialize in industry and region. So for more, of course, our marketing team will be connected to you soon. And that whole program has been completely designed by Melina, and her insights in ESG are the core part of it. So again, thank you so much, everyone, for your time. I hope the session was insightful. And thank you again, Melina, for being an a really interesting session hosting us. Thank you.
Thank you so much, Rahul. Thank you, everyone, for attending. And, I look forward in staying connected with you and exchanging insights for ESG and sustainability.
Thank you. Thank you, everyone. Have a good day. Bye. Thank you.
Bye-bye.